This is a Stock Trading Reality Podcast, episode 104.
Interested in investing, but it's kind of like watching paint dry. If I can make an analogy to that. I thought trading would be a good way to accumulate some funds to invest.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He's a big fan of cowboy names, Clay Trader.
Yes, I am a huge fan of cowboy names. And in fact, just to kind of back that up with some proof, when my wife was pregnant with our third kid, who turned out to be a boy, we always wait we don't find out early, but we had to prepare, well, what sort of boy name do we want? So, and bless my wife's heart, I mean, this is how cool of a wife I have. I can't believe she agreed to this, but I was like, I'm going to Google cowboy names. So that's what I did. I pulled out my phone, I Googled cowboy names, and I found a list, and I went through a couple, and, nah. Then my wife and I had discussion over one of the names, but I conceded and I lost the discussion. And then I came across Trip. That's how I like that name a lot. Trip. It was unique. I haven't heard it much. So yes, that is how my wife and I, arrived at the naming of our son. Was I literally, because I like cowboy names, I Googled a list for cowboy names, and their Trip was. And that's where the name came from. So yes, I'm a huge fan of those sorts of names. And Ches, I don't know if Ches is a cowboy name or not. I could see that out in the wild, wild west. Somebody walking around. Have you guys seen Ches?
Ches the Kid.
Yeah, Ches the Kid. Yeah, he's got a bounty on his head. But Ches, what is your? I mean, cowboy names. And I mean, you can tell me that if you don't like them. My feelings won't be hurt. But I think they're good. They got a good American sound to them.
No, they definitely do. And actually, so I come into, we always say this, I come into these introductions not knowing anything about the fun facts at all.
I'm a jerk like that.
So he starts saying about cowboy names, so I Google cowboy names, and it's babynames.net/cowpoke names, and I'm looking at it, and they're just, some of them are really nice. You got like Eliza and things like this, but Trip is a totally unique name. But I think you summed it up perfectly when you said, they're just kind of really American names, and some of them, have kind of fallen out of favor per se. But yeah, I'm glad you actually landed on Trip. I think it's a totally awesome name, and it's definitely unique.
Yeah, and I mean, names obviously go in cycles and stuff like the market, but yeah, if you're out there in search of just a suggestion, give it a try. I'm not saying you have to use one of the lists, but there's some really cool names on it, and I can't disclose what the name was. My wife and I had a discussion about, because my wife is currently pregnant right now, so when the new kid comes along, maybe we'll get to use it at that point, but that remains to be seen for a podcast down the road. So today we have Ches, what did you think? I mean, what did you think about the interview today?
So I thought it was totally unique, because not only did we learn about Mike's journey per se, and kind of some of the stuff that, some of the really hard times that he's kind of gone through, but we learned about kind of a methodology that would have kind of even prevented him from losing lots of money, and this was, no one could have predicted 08 and 09, and if you say you saw the writing on the wall, whatever, it took a lot of people by surprise, because the market just goes up. That's what the market does, and obviously 08 and 09 was a big downturn, but, just kind of his approach and methodology before he had to essentially start all over, I thought was absolutely fascinating, and that totally tied into, his kind of love for history. But I'm not going to spoil any more of the podcast, but it was an absolutely kind of awesome discussion that we had. We went down a couple trails that I wasn't sure we were going to get down, but yeah, it was pretty cool.
He's referring to me. We got into a discussion about civilization, but and I just lost it. I had another rant, so I'm not going to spoil anything more, but I'll just say Mike is kind of one of those get her done type guys. So let's hear from Get Her Done Mike. Mike, welcome to the show.
Oh, great to be here.
Now, I appreciate, right before we got recording, Mike let us know that fireworks will be ensuing within the next hour-ish, give or take a little bit, when his wife gets home and the dogs are going to go ballistic. So we're not going to rush this, but for you listeners out there, if all of a sudden you hear dogs going crazy, none of us are being mauled or attacked. That's all been known about in advance. So I guess Mike do your dogs like you, Mike?
They love me.
Okay, so you're not going to. So if you hear anything, it's not Mike getting mauled. It's none of us getting mauled. It's just.
We won't have to call 911 from here and have them send an ambulance or something. Everything will be okay, but there might be a little bit of noises. Couple introductions from the dogs.
Yeah, that would be an interesting podcast. Mike just gasping his last breaths because he's being. But what are we even talking about, Chaz? All right, Mike. Mike said he has listened to all of them, so he knows that these things aren't the most professional things ever. But again, thank you for being here, Mike. And let's just hop right in. So, what got you interested in the markets? Kind of what brought them to your attention in the first place in terms of where did you first hear about them, and what got you interested enough to then want to kind of get a little bit more proactive?
Well, I was first introduced to the markets by seeing them. You have to remember this is back in the 70s when I was in high school. So I saw them in the newspaper. I saw the stock quotations, and it piqued my curiosity as to, what the numbers were, what they meant. Did a little bit of research. I had time in geometry class because there was no way I was going to pass it, and my teacher was my track coach, so he let me sit in the back of the room and read the newspaper all afternoon. So
that's pretty awesome.
Yeah, no.
So obviously it's a long time ago, and obviously Clay and I have touched on in other podcasts before about how drastically different technology has made trading over the years, and how fast it's kind of grown and all that. But obviously you had an introduction a long time ago. Did you kind of keep this curiosity with you throughout the years after that, and start getting interested in an early age, or was it more so after you got out of school, got a job, and then had some cash to put in the market?
That's a complicated answer.
Good, we like complicated.
Well,
Let's break it down.
I kept my curiosity, but there were things that happened in my life that didn't allow me to trade. We'll just keep it that way. I had an interest through college, but I pretty much worked 3 jobs to get myself through college. My parents were great.
Bravo, sir. Bravo.
Well, they paid for my tuition, but I felt it was my responsibility to pay for everything else, to pay for insurance and for a car and books and meals and all of that. So that's where my focus was, throughout college.
Were you still interested, though? I mean, let me ask this: were you still checking the newspaper in college and keeping track of stocks, or did it totally fall off the radar for you?
Well, my interest took a little side turn. I love to read. I love history, and I do a lot of reading. And my interest was in historical figures that were involved in stocks. I read a lot about Andrew Carnegie. I read a lot about different business people, So I was fascinated with some of their stories. I read a lot about Cornelius Vanderbilt, some of the stuff he had going on.
What about Rockefeller?
Rockefeller didn't interest me as much as some of the other guys, especially Vanderbilt. He had a tactic. If I could tell a little bit about him.
Yeah, go for it.
If he had enemies that he wanted to do away with, he would manipulate his stock so that it would be attractive for them to short sell it. Once they short sold enough of his stock, he would buy up everything that was available on the market, leaving them nowhere to go when they had to buy the stock to cover their shorts. And he drove a lot of his competition bankrupt using that same technique over and over again.
Oh, great. This is what's going to happen, Ches. There's going to be people that trade penny stocks that are listening to this, and now we're going to see on the message boards, did you know that Cornelius Vanderbilt, it's Vanderbilt's like great nephews are going to be blamed for all these penny stocks now.
Hey, SEC, have you looked at the Vanderbilts lately? They still doing it? Yeah, stuff like that. But yeah, they're all going to, thousands of people on the internet are going to pool their money together and try to start manipulating things, and then one guy's going to have the password and change it on them. It's it's going to go down a rabbit hole, that's for sure.
Now, maybe you know this, Mike, and I'm just asking out of curiosity. When did short selling actually start? To be honest, I had no idea that it existed that long ago, because that's 1800s you're talking about.
That's mid to early 1800s.
So do you have any idea when or was short selling always part of the market from whenever the market got started, or you're not quite sure?
I'm not quite sure on the answer to that, but I know he was doing it back in the 1800s.
Yeah, I saw a couple shows on History Channel about him, but they didn't quite explain it like that. But yeah, that makes sense with the way. And I know the guy was filthy rich, so yeah, that he could definitely buy up all the stock and literally leave the shorts nowhere to go unless.
Sure.
Yeah. Besides bankruptcy, So
Yep.
you are reading all these things in college. Were you a history major?
No, I was not. I was an anthropology and archaeology major in college.
Oh, so we have a Ches. We're talking to Indiana Jones right now.
Pretty much.
Wow. So are you like in the Amazon forest right now, dodging boulders and crocodiles and all that stuff? Or you?
He's in his mosquito net.
Yeah. Well, that's all right, Ches. Let's knock it off our bucket list. I don't know if it was on yours, but we've officially talked on the podcast to an archaeologist. So fantastic.
Yep.
So
Cross it off the list.
there we go. So through college, you can't, like you said, there's just other things going on. So when did the stock market start to become an actual reality, where you could start to divert more attention to it?
Well, after college, I got married pretty much right away after college. I was married by the time I was 23. And my ex-wife's mother's cousin was very involved. He was a bond trader, and he was very, very successful. He was on the level of owned a sports team, kind of successful with it. He started with it.
Successful then, a little
Yeah,
successful.
just a little
Yeah.
success, just a smidge.
What year is this out of
So-
curiosity to keep the timeline in order?
It
80s
was
here?
around 84, 85.
Okay.
Yeah. So I was very much interested in the market, and he put me in contact with his broker, who took me to the trading floors in New York. I got to go on Wall Street and go on the trading floors in a limousine. It was very, it's a pretty wild day. Also, I got to go to the offices of this broker, and I was interviewed for a job. And I did not take it.
Really? Now you gotta explain to us why, because considering all the stories you've read, a lot of the history of the market. Obviously, you got somebody in the family, kind of with ties that has done very well with it. Why exactly did you pass on that?
Well, how do I best explain it without using the kind of language I wouldn't like to use? This this guy was a complete horse's ass. He treated the people that helped him like dirt under his feet. It was really pitiful to see how they, jumped at everything he wanted, and he just treated everybody like dirt. And I just didn't want to work in an environment like that.
So you saw this just because you would go in and you just kind of be like a fly on the wall. You were observing all this as it happened.
Right. I spent the whole day in the offices.
Do you have like a good story you can tell us as an example?
Not really. This was a long time ago.
Did he slap a coffee out of an assistant's hand and hit him in the face with it or something?
No, but there was a lot of screaming and yelling. A lot of the assistants were expected to do a certain amount of research within a certain amount of time. If they brought him something he didn't like, he would berate them, scream at them, yell at them. It was really, unacceptable. So
it wasn't exactly worker friendly. I mean, but I'd say this guy makes me sound pretty good because Ches, I mean.
I was going to say, I thought I worked in a hostile environment, but compared to this guy, I'm living on, Dream Street over here.
Yeah, so Ches can just stop complaining all the time about everything because I say, gosh darn it, Ches, do that better. And he starts, quit cussing at me, Clay. This is, my mental fortitude can't, no, we're all kidding aside. Ches is much worse than what we're even giving him credit for, but no. So you turned down this job, and not Ches. I'm with you. When he said no, I was just, I think my body kind of just snapped back a little bit because I thought for sure it was just going to be. So I took the job, but you did not take the job. So where did you go from that point?
I went into the family grocery business. At that point, it was something my great grandfather had started back in the 1920s, and it was a successful business. So I got involved in that, and I started, saving money, putting some money aside, and I bought, during the time I was married to her, I bought a series of 4 houses. Started with a condo and fixed it up and sold it for a profit, and moved my way up into a very nice large house.
Very cool.
And
So
then
at this point, is this kind of the extent of your trading? You're almost, trading. You're pretty much buying low, doing some work on it, and selling high for these houses. You're not actually in the market though at this point, right?
No, I was also in the market. I got involved in the market. I really didn't know what I was doing at first. My first purchase was 1 share of Kodak stock. And I believe the commission was either $10 or $15 to get in, $15 to get out. And the stock cost $70. So I came to a very quick realization of the percentages it would take, to make a profit on that, and realized that I definitely have purchased a little bit too high, for 1 share.
Well, to be honest with you, a $10 or $15 aside is actually pretty. Actually, at the time, I guess that what the dollar was worth and all that stuff is kind of different. But I was gonna say, compared to today, $9.99 E-Trade, that's like a normal thing, and they try to sell it as this great price. But then again, I got to remember, $10 then went a little bit further than it goes today. But okay, so obviously, you had some of your hands in that, but so obviously you've done some flipping of these houses and these condos. You got yourself in a nice house now.
Right. You
got this grocery business. So where does it all go from there?
I got interested in value investing. And I started doing a lot. I'm the kind that I do a ton of research on anything that I'm interested in. It takes me a little while to get out of the gate because I spend a lot of time researching. Like right now in paper trading, I haven't put anything in real money yet because I'm still in the research phase. So I started looking into value stocks. And at the time, things were just starting to happen on the computer, but not quite yet. So I found something called Value Line. You would go down the library, and it was about 5 or 6 huge binders that you could sit there because it was research. You weren't allowed to take it out. You had to sit in the library and read it. And each page was a different company, and it had a little bit of a chart on it, and it had a company history and all the, because I wasn't, doing anything technical. It was all, about earnings and price per share and price per earnings and
the good old fundamentals.
The good old fundamentals, and it was about, I got heavily into Buffett and reading all about what he did in his life and his techniques, and Charlie Munger, and I got interested in that, and, reading some of the different literature that was, out about his life and stuff.
So to go back to the Kodak thing, I'm just curious.
Sure.
When you bought that 1 share, was your mindset going in that I want to trade this thing, or is that an investment at that point in time? What was your exact game plan in regards to that?
Everything was an investment. Everything was buy and hold for 20, 30 years and, never sell anything kind of mentality. Which I find with trading now is getting in my way a little bit because I was so locked in for so many years into buying and holding that I have a hard time letting go.
I can totally relate to that. On the flip side, because I started my investing with real estate, and now I'm building up my retirement accounts through stock trading, or not through stock trading, stock investing. So here I am. I'm so used to trading, whereas the exact opposite end of Mike. I'm like, no, come on. I want that extra 15 cents. Whereas, what does 15 cents matter if I'm going to hold this thing for the next 40 years? But so, Mike, I can totally relate to that. Just on the other side of the equation. And Ches, I know you came into the market trading, and I mean, can you kind of relate? I'm assuming. I think that's probably pretty natural. What you're used to, and then doing the exact opposite. It's just human psychology, the way our mind works.
Well, yeah, going from day trading options to kind of swing trading them with option spreads and stuff. I was I still am in the bad habit. It's not that it's a bad habit, but I'm staring at it tick by tick, and I go, I'm going to be in this trade for 3 weeks. It does not matter one bit at all. Me watching the fluctuations on like a 1 minute chart or something like that. But yeah, it's just drastically different. I think the biggest contrast though is definitely for you. Obviously, any of the listeners who've ever watched any of your live trading videos, I mean, some of your trades are shorter than 40 seconds, and now here you are trying to put on trades that you're planning on holding 40 years. So yeah, it's just a big it's a big shift, and it's hard to kind of acclimate.
Yeah, for sure. And so, Mike, you are so I guess what exactly, because what I'm thinking is, all right, you were saying, oh well, if I only have 1 share and the commissions are this, that, and the other, but if you were going to hold that for the next 40 years,
Right.
I mean, what sort of calculations were you running that still didn't make you, did that, I don't know how to ask, but it seems like you shouldn't have cared because you're going to hold for the next 40 years, so who cares, what you paid to get in because, 40 years from now, Kodak will easily have wiped away those commissions. So did something dawn on you, or did you run a certain calculation that smacked you in the face? What exactly happened with that?
Well, unfortunately, over the years, Kodak wiped away a lot more than that,
Very true. Yeah, I was thinking, is that the Kodak that is no longer around? But sounds like yes, I was thinking of the right one.
Well, it just, didn't add up to me. So I started just investing in lower price stocks, not penny stocks, but lower priced, good companies that made sense. I would go into Value Line and I would look. They had a page of stocks that were the widest discount from the price. The biggest discount. It was a whole page on there, and we'd look through it, and I would do the fundamentals on those individual ones, and I had a couple of really good winners when I did that. One I bought at $1.35 and I sold it at $34. So, I had a couple of really big successes. So it was a little bit of fool's gold, but I kept my head straight and I built up a nice little account. And then pretty much the bottom fell out of everything. I went through a divorce and I lost my business. They opened a supermarket about 2 blocks away, and it wiped me out within 6 months.
Sounds like when it rains, it really kind of stormed for you there. Just a flurry of events that some out of your control and some just unfortunate kind of happenings in reality. And so obviously you pretty much had to start from the beginning, didn't you?
Well, no, I had to start even worse than that. After all the smoke cleared and everything was said and done, she left me with $40,000 in credit card debts. So
now you're not even starting from scratch, starting from underwater.
Yeah, exactly. Yeah. Starting from underwater. And thank God for my second wife, my current wife, because she's an absolute angel, and she put up with many years of me scrimping and saving and paying my way out from under all of that. And it took a long time. And needless to say, I wasn't going to be making any investments while I was trying to dig myself out from under something that was 20% interest rate.
Now, I'm just curious. So, putting all the personal things aside, would your portfolio, did the divorce affect your portfolio, or when you're saying the bottom dropped out, are you talking about when the .com bubble, collapsed? Did that take a lot of your portfolio, or
No, I had sold it all before then to pay off as many debts as I possibly could.
Okay, so it was literally the personal stuff flat out affected all of your portfolio stuff that you had been building up over the years. So
yes.
And yet you've already said then you started to rebuild. So for you listeners out there, Ches, look, more ammunition in the gun. No excuses. I don't want to hear it. Mike, I'm trying to rack my brain. I mean, we've had some crappy stories, but he definitely had a rainstorm, a tsunami almost in his life, and
this one might take the cake for sure on that one. But everybody who says, "No, I don't have any money to do this or I don't do that," not only did Mike lose the money he had, he actually now owed money with an interest rate on it and was still able to kind of, pretty much work his way out of it and, rebuild and, maintain and just kind of get back into the groove of, not only life, but back into kind of the market and what he's doing. So, that's just a flurry of events. I mean, it's unbelievable for me.
Yeah, it's pretty, it's crazy. But, so when the .com stuff all happened, were you out of the market during that period?
I was out of the market during that period.
I mean, obviously you don't know, but let's say you had kept your portfolio intact. Based on the way you were trading, do you think you would have been slaughtered during the .com pop? Or do you think
not at all? No,
so you think if you transposed your strategy, what you were doing in the .com, you would I'm not saying you're going to come away unscathed, but it's not like you would have lost your whole portfolio or anything.
No, not in the least, because I didn't have any technical stocks. I only invested in, and you have to remember too, for my kind of investing and value investing, I'm looking at businesses that I understand. I understand retail. I understand the food business. I understand grocery. Things of that nature, retail stocks. So I really didn't understand technology because I didn't grow up in a computer generation.
That's got Warren Buffett written all over it. Yeah, that's not that I didn't believe you when you said you were reading all about him, but yeah, that's what
Right.
Buffett says, right? Invest in businesses that you know and understand, and that would make sense that you knew the food business because you were in the grocery business. So now, do you think that you might have gotten caught up in how are your emotions, I guess, at this point? Were you very disciplined, or do you think could you have foreseen yourself maybe? Because if I saw myself, I'd be like, oh, wow, look at these tech stocks, another IPO. Or do you think you would have been able to totally block that stuff out, because you're very disciplined from an emotional point of view?
I am pretty disciplined, and I was able to block a lot of that out. But, yeah, it's difficult to see things, skyrocket the way some of the stocks did at that time.
Actually, now, man, you're not to pour salt in the wound, but it really was crap because now that I'm thinking about it, here you are reading the news, reading the headlines, IPO, new high, and you are missing out on all this because you're paying off credit card debt. Is that how it unfolded for you?
Oh, pretty much, yeah.
Oh, good. That's so I would argue you actually, because I could very easily say, man, I forget that credit card payment. I'm going to go put some money in the market because all these things keep going to new highs. So I would say that you actually did demonstrate very solid emotional discipline by just letting the traffic pass you by as you were kind of on the roadside, filling in that hole.
Yeah,
Yeah,
I have a question first, and then I just hope I think I know the answer to it, but I think obviously you will know the answer to it. Based on how you're looking for what I think it's value investing and stuff like that, would any of those tech stocks even have fit your criteria because they were like PE ratios that were just to the moon at that point? Would any of those have even fallen in a category for you to be interested because they were just so high at the time already?
Exactly. So nothing really would fall into that category. It would have to be a discount, be selling at a tremendous discount for me to even consider looking at it. And those kind of stocks don't sell at a discount because their businesses really the price isn't really based on anything.
Besides, speculation and just
right. A
lot
of those high flying companies aren't even making a profit.
And the reason why I asked that because I was thinking to myself, I don't even think that any of those would fit in the criteria for how he's getting into it. And like Clay said, not that you would have come away unscathed had your still had a portfolio, but at the same time, because obviously the whole market went down tremendously at that time. But at the same time, you wouldn't have been long your whole big house on these tech things just pretty much on hype just based on your kind of your discipline and your methodology. So I think it's pretty cool. It's almost like he would have avoided kind of some of the big crashes as best he could. Not that he like you said, Clay, obviously it hurts when you see all these things IPO and go to new highs and you can't participate, but at the same time his methodology actually would have kept him out of most of it. I think that's actually pretty fascinating actually.
Yeah, that's it is, and I would argue his best methodology may have been because avoiding it. I mean, because I can see myself, I'm paying off debt, and I'm reading the newspapers, new high. Well, if I just take this one credit card payment and put this in the market, then I could pay off all the debt in one fell swoop, and then that could really go in a disastrous direction, but. Because you were disciplined, Mike, props to you because, man, that sounds like it had to have sucked during the time. I mean,
it absolutely did suck, but every payment I made was a guaranteed 20% profit.
There we go. I love the rationale
couldn't have
there.
Said it any
Absolutely,
better.
Yes. For you listeners out there, if I'm assuming that's what the credit card rate was, 20%.
Yeah, 20 or 21% at that time. Yep.
So a penny saved is a penny earned by Mike doing that and paying off the credit card. Perfectly said. I'll just leave it at that because I could go off on a whole tangent about personal finance and the right way to look at things, but awesome mindset. So, man, I really want to just keep talking about this time because it's so depressing, but in a very interesting type of way. But, yeah, again, props to you for just putting the axe to the grindstone. And, again, I don't want to hear anybody's excuses. I don't want to hear anybody's sap stories because this is pretty brutal. So you pay off. How long did it take you to pay off the debt? I mean, let me just put it this way. What year did everything finally paid off and you were ready to jump back into the markets?
Oh, about a year ago. I would say
okay.
Maybe a little bit longer, maybe 2 years ago. And then I started jumping back into my research phase. But this time I got more interested in trading than investing. And
Okay.
I researched a little bit. I found Tim Sykes and I found a few others, and I looked at it, but I didn't feel comfortable with it until I saw this guy on YouTube in a t-shirt. And it
sounds pretty shady to me.
yeah, I tell you. And it just, I don't know, it felt right. You know, it just felt like there was a lot of sincerity going on there, not to blow smoke up your, but
It feels kind of good, so yeah. I mean, you can no. They're the first time listeners out there. Bless your heart. Please just keep listening. I promise we'll get more professional. Now, again, just because I'm super fascinated by this, because it really, as a former engineer, process engineer, I like processes, I like systems, and to know that your process and system would have avoided the .com bubble pop. Let's transpose that now into the real estate bubble pop in 2007, 2008, the massive financial crisis. How do you think your strategy and system would have held up within that? Because that was, much wider than technology stocks. Do you think, obviously, you're not going to come away unscathed, but how do you think your systems and strategies would have worked out at that point during that period of history?
It absolutely killed me. There were so many bargains laying around, just ready to be picked up at that time, and it killed me to see that. Not to be able to just scoop up some of those bargains I saw. I mean, prices dropped regardless of what the company was. Everything just dropped across the board. And then if I had cash at that time, I just could have picked up any companies I liked at a bargain price and then just rode them up over there. Because the market always comes back up. No matter how much it goes down, it always comes back. You just have to wait, as in an investing perspective. You just have to wait until it does. That's all.
And, I was thinking about that a couple days ago, and from a just strictly anarchy point of view, from a very strict just the powers that be wanting to remain the power that be, and for the health of civilization itself, I mean, the stock market has to go up, right? Because if the stock market goes down and stays down and stays down and goes down some more, people lose all their money, people lose all their retirements, and then the population starts to get restless. And restless populations are not good for civilization itself. So whether or not manipulation takes place, I don't know. I'm not saying that. But for the health of civilization itself and for the health of anarchy not happening, am I crazy here? Or does that, I'm not trying to put on a tinfoil hat, but I fully agree just from that very kind of primitive, kind of like caveman perspective on things that the powers that be, if they want to remain in that spot, the stock market does have to go up over time, right?
I think you need to have a seat next to Janet Yellen, Clay. I think you guys need to figure out monetary policy for the country and keep that market roaring. Keep that bull market roaring.
There you go.
I'm not saying the market can't go down, but to Mike's point, I mean, if I would have had that viewpoint then, why would you not pour all sorts of money? I mean, did people really think that the market was going to just collapse and go down? I mean, you realize the headlines and stuff, but you just can't let that happen, right, Mike? I mean, from a civilization perspective, you can't let the market crash and stay crashed, or else everybody loses everything, and then there's anarchy in the streets.
Right. When people panic, it's time to buy.
And really, there's no need to panic in the broad scheme of things, because the market has always come back up, and I would think always will continue to go up. I guess if the market doesn't come back up, at that point, that's where guns, bullets, and water probably becomes the most valuable currency out there, because if the stock market stays down and never goes back up, that just implies that we're kind of like back to the pioneer.
We have a lot more to worry about than the stock market at that point.
Exactly, yeah. Well said.
I mean, Big Uncle Warren, what a great quote was, be greedy when others are fearful and be fearful when others are greedy. I mean, it just ties right directly into that about how kind of the cyclicality and how, you can at least assist you in spotting turns in the market based on, just a herd mentality. The whole, psychology of that stuff has always been fascinating. But yeah, I never even thought about it in the terms of, honestly, if the market goes to zero, it's just riots and looting and just be catastrophic. But yeah, I never even thought about it that way. That's a great point.
Well,
at that point, when the market goes down, go for it, Mike.
I was going to say, at that point in time when everything was going down around 2008, my wife is a school teacher, and she has a 401k through the school, and a lot of her peers in the teaching business, as soon as things started to go down, were bailing out of their accounts right and left. And I told her, I said, it's time to put more money in. I said, you want to change your account, you want to go for more, maybe growth or something. I said, you want to allocate more money into that account. I said, do not sell, don't panic, don't pull back, don't pull out. I said, this is the time to buy more. So she allocated more of her pay into that account, and she's doing very nicely with it now.
Yeah, I still remember, because that's when I worked at Honeywell. I was there, and I remember just after I'd left, this is when everything popped. But I just watching Honeywell stock, like, how can Honeywell stock be? I mean, this is crazy. I mean, what is? But you were right, Mike. Everything, no matter how good, or I mean, even companies that were doing everything right, they just got absolutely hammered. Do you have one stock in particular that really stands out that you wish you could have bought, or are you just saying across the board there are just so many good deals?
There were just so many good deals across the board. You could have picked up almost anything, and it would have done well.
Yeah, I always like going back to the chart and then looking at. I mean, you can always see when the it happened on any stock, because you're right, Mike. Like you were saying, everything went down. So on any company's chart, you're like, yep, there was a financial pop because that stock got absolutely hammered, and now look where it is, and it's. Hindsight.
Just look at any 10-year chart. You can see the dip in 2008 and comes back up. Yeah.
And I guess for me, I was out buying real estate at that point in time, because when everybody was saying real estate's the dumbest thing ever right now, I thought, is it the dumbest thing ever? Because these prices look kind of interesting to me. And real estate prices have bounced back nicely. But anyways, let's get back on. So you, what is fascinating, and what I'm curious is, okay, you have this history, you have a system of investing long-term, and now when you're ready to get back into the market, did you actively think you wanted to get into trading, or did you stumble upon something? Were you searching like stuff for investing, and then all of a sudden you kind of like slipped off the path a little bit, and then all of a sudden you're in the the fields of trading? Like, how did somebody that seems to be very good, very into investing, all of a sudden be stumbling across some of the people that you did who are in the trading world? Does that make sense?
Yeah, it does. Well, I'm interested in investing, but it's kind of like watching paint dry. If I can make an analogy to that. I thought trading would be a good way to accumulate some funds to invest. So what I like to do with my strategy is to trade till I get to a certain point in my account, and then remove some of those funds and invest them in longer term stocks, and then continue to trade and build up an investment account through trading.
So Mike's essentially funding his longer term kind of retirement type account with profits he is getting from shorter term trading. So what this does is, instead of just allocating, a part of his paycheck every month to that, he's trying to essentially increase the growth for this, which, can lead to kind of compounding and exponential growth and things like that. And I think that's an absolutely fantastic way to use the money. You're not telling us that you grow the account to X amount of dollars, and then you go take a $5,000 vacation every 3 months or something like that. So I think you're placing your money exactly where you should be, and I think a lot of people would actually benefit from kind of doing strategy similar to that. That's a great strategy.
No, maybe I misheard, but you're still paper trading right now, Mike. Correct?
I'm still paper trading right now, and I'm saving money.
So this is all theory. This is the theory of what you want to accomplish.
Yes, it is.
So to Chez's point, I will say that I'm glad to hear that within the theory of things, it's not make $5,000 in my account, go on $5,000 cruise. It's no, make $5,000, put $5,000 into long-term investments, which will then grow over time. So I like the theory of that for sure. Now, are you working a full-time job right now, or are you just focusing fully?
No, full-time job. I out of the house usually by 6 a.m. and I don't get home until 5 p.m. So I pretty much miss the entire trading day. So
walk us through, because I can see a lot of people, I got a full-time job. Everybody says that you're supposed to study. Everybody says you're supposed to research and kind of just, invest in your education, but, you got to learn. But I got this full-time job. So for those people out there listening, walk us through, how are you fitting all this in to actually learn and put in the time to learn how to trade with a full-time job, which sounds pretty intense?
Well, I have a 35-mile drive to work. In the morning, it takes me about 40 minutes, and coming home sometimes it can take up to an hour and a half. So I do most of my studying in the car.
So
I gotta utilize my time, to the best of my advantage.
So are you listening to just stuff like podcasts? What are you listening to? Please don't tell me you're like watching screens when you drive, because Mike. But I'm pretty sure that's not what you mean.
No, I'm listening to the courses, and then I rewatch them to see the screens. I don't have that like up on my dashboard where I'm
I have a 21-inch tablet on the dash of his car as he's driving down the highway at 70 miles per hour. So that's good. We're glad to hear that.
Yeah,
but when do you get time to watch? So you're listening, but when do you get time to watch? Which it's kind of fascinating, because you hear it first and then you hear it again, but now with visuals. So I think that's pretty fascinating. But within your time schedule, when do you actually get in front of some screen time?
Weekend mornings, while my wife is still sleeping, I get up before her. I'll get up early, like I do for work.
What time is that?
About 4:30, 5 o'clock.
See, people? Sorry, Mike. Hold on. I don't want to hear your excuses. Oh, I don't have time. 4:30 in the morning exists, okay? And here we have Mike, who just, 5 o'clock. Fine, don't get up at 4:30. 5 o'clock. I don't want to hear your excuses. I have more proof now. Here we go. More proof just showed up. There are hardworking people out there. So excuse me if I sound like I'm a jerk to some people, because I don't want to hear their stupid excuses. I have more, just another shotgun shell right here. Mike. His name is Mike. 4:30 in the morning on the weekends, you said, right? So is this like a Saturday morning?
Yes.
Well, Saturday morning at 4:30, he's finding time to make it happen. So I just don't want to hear it. And I'll chill out, but I love when I get more ammunition and I get more proof that there's hard workers out there. And if you're lazy and I deem you lazy, that's fine. Call me a jerk, whatever, because I know there's Mikes out there in the world. And anyways, so sorry to cut you off, but
no, that's fine.
I love it, because you're the type of people, that's what it takes. And we won't even revisit the whole kind of episode you were previously in life. I mean, you've bounced back and you're still working hard. So, yeah. I don't know what to say, but great job. So you're getting up at 4:30 to find screen time. And, I mean, is this just on weekends, or are you up late too? But keep walking us through your schedule. Sorry for being rude and cutting you off.
No, that's fine. It's tough. It's a little tough to be up late, because I do get up at, the alarm goes off at 5 in the morning. I got to get out the door by 6. I got 3 dogs and a cat to take care of before I leave. So, actually, Nate saw a picture of the 3 dogs. I sent him a photo.
Nice. So, you find time. That's kind of the way to illustrate your routine.
He makes time. He doesn't find time. He makes time for it.
You make time. You do what you have to do,
That's great. So, what are your plans? Obviously, you're paper trading.
Right.
What are you paper trading? Are you doing options? Are you doing stocks? Walk us through kind of we know your theory of how you want to generate money to put it into long-term stuff, but walk us more through of kind of your business model. There we go, because this would all be part of your business model.
I absolutely love options, but I really haven't gotten up to the options course. I've just started the options courses, so I only know enough to be dangerous. So I'm not.
Well, at
I'm
least
not
you know that, though.
Yes. I'm not committing any real money to that yet until I know a whole lot more about the risk. About managing my risk in options, because managing my risk in stocks I assume is going to be very different once I get up to the part about managing risk in options.
And there's actually, me speaking from options personally, there's some really cool ways to structure risk. And I know I say this in every podcast, and I wouldn't doubt if there's some comments in some of these podcasts that say, Chad, stop saying this. But the only thing we can control as traders is the risk we have on at the time, whether this is short-term trading or, longer-term trading. And obviously, the one difference between options and stocks especially is that, obviously stocks can gap up or down, and they do quite frequently. And, there's nothing, especially if you're in the stocks and you have no access to post-market or pre-market or anything like that, even sometimes just in the overnight session, something could be drastically large and, move something a lot. With options is really cool, and especially if your focus is on risk, which I love to hear. I love hearing that all the time. I just absolutely am fascinated with risk management. But as you can actually structure your risk that no matter where something gaps, how far against you can always have a set amount that you're risking. And that's some really cool stuff. And yeah, you just keep continuing through those courses, because you're going to see there's a lot of cool strategies you can apply to really make sure you keep your risk exactly how you want it.
great.
And I would assume you're probably going to be taking a swing trading approach to options. Is that an accurate assumption?
Yeah, without a doubt. Yep.
And so, which options course are you on right now? Are you to the advanced one yet, or just going through options trading simplified?
No. Just simplified. Maybe the second or third lesson. So I'm just into it.
And so, what catches your eye about options so much? You say you really like them. So, what exactly is kind of what's floating your
affordable.
boat?
It's basically affordable. It's a low budget way to trade stocks, and to trade the kind of stocks that I would like to trade, because I still can recognize what are good companies, and instead of getting into the world of companies that might be dangerous to trade.
And he couldn't have said it any better in the sense that he can trade companies that he wants to trade, and what he really means by that is instead of putting up $10,000 for 100 shares of Apple or something like that, he can literally almost determine to the dollar how much he wants to put in. Options are a leveraged product. Essentially every contract you hold is worth 100 shares essentially, notionally, but at the same time it's a much smaller capital outlay to not only trade but also swing trade some larger names that like you said are companies that he's not particularly dangerous. And I'm assuming what you mean by that, Mike, is dangerous in the sense of, we don't think that Google's going to go bankrupt overnight or something like that. This isn't like some startups or something like that. These are well-established companies that are, well known to the market, and it just really opens the door for him to trade. And I'm very happy to hear that you said, obviously you're going to be taking a swing trading approach, because, working a full-time job like that, the beauty of this stuff is that you can literally set it, forget it, and actually you don't even have to check on it at all. I usually always tell people, I check on it, just check on it during your lunch. Just literally take a couple minutes, go on your phone, log in on your computer, and just you can literally check your positions and then just let them work for you. So yeah, there's a lot of stuff and options that I think you're really going to enjoy, especially with kind of where you're at in your life and your work life, and how much time you actually do have. So yeah, you're definitely going to enjoy that, and you're only just skimming the surface now, so you just keep going through that.
Now I have a question though. I'm curious.
Sure.
When you start to, and maybe you don't know the answer to this, Mike, but when you're starting to put together your trade plans, is all this stuff going to be based on technical charts? Or are you going to be bringing in only fundamental stuff? Or are you going to do a combination? Where exactly are your trade plans, your kind of trade ideas going to come from?
That's a really good question.
Because it sounds like, I'm fascinated because you sound like Dim. I don't remember what episode he was on, but he always had kind of that fourth dimension, and that fourth dimension was fundamentals itself. So, but you're not quite sure what approach you're going to take quite yet.
Well, I love when I look at the technicals of a company, and then I figure out maybe if I want to trade in that particular stock or not. I really can't help myself. I need to know what the company is, what it does, and what certain aspects of the fundamentals are. It's just so ingrained in me by this time. I can't help but get a little more involved. But at the same token, when you start to invest emotionally in a company like that, it has a danger of locking you in to being hard to let go of it.
Well said, because that's what I was thinking. My thought process was, that does make sense, because Mike can have more conviction in whatever his trading strategy is based on the chart. So he's looking at a chart, but he's getting some additional conviction from the fundamentals. But to your point, it's a very fine line, because if that conviction can all of a sudden turn into you're drunk on Kool-Aid, and now all of a sudden you're violating your trade plan based on the chart. And but yeah, that's definitely a fine line. But to me, Chaz, I think that makes sense. He's aware of the gray line. He's aware of that gray area out there. So I don't know. What do you think? I think that makes a lot of sense, knowing that he's aware of the trickiness that it might pertain.
Oh no, I think I couldn't agree with you more on that. It's his awareness of that. It can only kind of help him in what he's trying to achieve. So yeah, I completely agree.
Now, Mike, are you to the point where you're watching any sort of specific tickers right now in your paper trade? Here's a better question. What exactly does your paper trading consist of right now at this point in time?
Well, what I did was when I first started paper trading, I made the huge mistake that I'm sure a lot of other people do of going on Thinkorswim and having a $200,000 account and saying, wow, look at this, I can make $30,000 trades and I'm making all kinds of money. And then I got more realistic with it. I closed out that whole thing. I went back to zero and I opened up a $2,000 account. And at any one time, I'll only try to trade maybe 5 or 10%, try to keep my trades around $200 so that it would be what I might be, doing realistically once I fund the account that I want to trade with.
Yeah, I'll nitpick here, but I think I know why you said that you might be trading with real money. As soon as, and I think it sounds like you're still in kind of just that you're trying to figure out a few pieces, but as soon as you know for sure what it's going to be, then just eliminate the whole it might be. I mean, just stick with what it is going to be. But I realize at this point in your journey, maybe you don't quite know what it is going to be yet. But does that make sense? I mean, if you say that it is going to be 200, and then all of a sudden you find yourself doing, well, I might do 250. Well, now your paper trading's not matching up with what you're really going to do. If you're telling yourself you're going to do 200, then don't all of a sudden let the word might creep back in, and all of a sudden you're doing different amounts. But so just kind of me speaking out loud some observations, but it sounds like you're still figuring out what exactly it is going to be as opposed to what it might be.
Yes, correct.
Okay, so, man, I wish we could fast forward, like take the time machine and fast forward and see where Mike's going to be because...
Well, since August, I took the $2,000 account and now I've turned it into 31 and change, so...
3,100.
Yeah, 3,100, like 3138.
Yeah, I thought you were saying 31,000.
No.
I was like, do I have the heart to try to constructively criticize that? Well,
bubble.
Mike,
No.
there might be some flaws in there, but yeah, no, that's more than realistic. I mean, just a little, time reference here. It's been about 5 months or so. What's my math? No, about 6 months, right?
Yeah, about that.
Okay, so yeah, and you may be thinking, well, geez, that's only let me put it this way. If you're listening thinking, wait, in 6 months he's only made like $1,100, you're totally missing the point. You've been hoodwinked by the marketers out there that are walking around with all their fancy stuff, trying to make it sound like it's all about the money that you're making. Money, make it rain, cheddar. No, Mike is working on habits, and not only habits, but good habits, because when you have good habits, those are scalable. You can scale them upwards. But if you're just out there focused on simply the money and, you only made $1,100, you're focused on the wrong things, and I'll just leave it at that. We've beat that dead horse many times here on the podcast. So do you have any sort of what strategies have you been using to grow that account over time? I mean, do you have any sort of favorite indicators on your chart? Walk us through kind of the process that you've been using to grow your account.
Sure.
Over the past several months.
Sure. Well, I have the 10, the 50, and the 200 simple moving average on there, as well as the Bollinger Bands. And then down below, I have the slow stochastic, which I like in conjunction with the Bollinger Band. If the stochastic is lower than 20, and I really like stocks that are, overextended to the downside, I tend to veer, towards those kind of stocks because I think that they have a little more room to bounce back up.
Well, Mike, not to cut you short, but time does really fly, and it was an absolutely fascinating story, and we definitely spent a lot of time in the past about kind of stuff and some hypotheticals, but this was an absolute pleasure. But I know the real reason you did come on here today, and first off, we want to thank you for being a guest today and stepping up to do that.
I'm waiting for the dogs. Looking at the clock, I'm waiting for Mike to be mauled any second now, so, man.
Yeah. So, Mike, if I could lend you my time machine and you could go back to any time period you'd like, where would you go and what piece of advice would you give yourself?
That's, wow. And I've heard a lot of podcasts and I've thought about this question, but I think I might go back to that time period where I turned that job down and dipped my toe in the water. Even though it looked like a really horrible place to work, I might have stuck it out and learned a thing or two at that stage in my life. It would have been a different life after that point.
I'm not saying that's the wrong answer, but I would just playing devil's advocate, or you could have been just so severely scarred that maybe you would have never wanted to touch the market before.
It cuts both ways for sure.
You never know. I can totally see why you would say that. That might very well be my answer too. But try to look at the glass as half full. Well, who knows? Maybe he would have scared you off from the markets. But
maybe. But I sometimes wonder.
Yeah. Oh, absolutely. You have a great journey. Let me just sit here and say that. I feel like I just want to stay in your past. Like your story is so fascinating that to Chez's point, we spent a lot of time in the past. But I mean, come on, listeners, you can't deny that he's been through a lot and he's seen a lot. That's. Anyways. We got to move into the fun questions now, all right? And
sure.
We'll just have to have you back at some point in time. Last week you heard from Sean, so you know that we're starting to bring guests back. So there's no doubt about it. At some point we'll definitely bring back Mike because I want to just talk more about his past and obviously see how he's been doing because he's clearly going through things in a very methodical way. So, Mike, what is your favorite movie?
Hands down, it's a movie you probably never heard of called Kelly's Heroes.
Oh, isn't that?
I have actually heard of that.
Yeah, isn't that like a war type movie or something?
It's a World War II movie about a bunch of guys that find out that there's a bank full of gold behind enemy lines, and they're going to go after the gold. So Don Rickles and Clint Eastwood, Telly Savalas, Donald Sutherland. It's just a lot of stars in the cast. It's a great movie.
Okay, adding that to the list for sure.
Yeah,
that sounds
put that on your list.
Pretty good.
My dad showed me that one a long time ago when I was younger, and I can still remember it to this day. And I haven't seen that movie in probably 15 years or more. But yeah, that's a good one. But what would you say is your favorite meal and dessert?
I would say my favorite meal is your basic steak and potatoes. There's a place I go to here called Steve's Sizzling Steaks, and it's a local place. It's been there since the 1930s, kind of like a hunting and fishing atmosphere, the rifles and stuffed things on the walls and everything. So that's always been a favorite since high school.
One word comes to mind when I hear that: America. And that's all I.
And if it's been there since the 30s, that's true America. Just been
absolutely.
there through thick and thin. That's pretty awesome.
Absolutely. All right, I'm going to go off the cuff here because I'm curious. Favorite historical figure?
Ben Franklin.
Oh,
absolute hero.
We just
Absolutely.
Did we just become best friends?
Can
Can anybody name the movie? Anybody? Listeners?
Listeners will
Chaz,
have to
can
do
you get it?
Was that Step Brothers?
Well, Chaz, getting into the
I'm
movie
catching
quotes.
on.
Impressive.
I'm learning more about movies than I even know, and I think I've only seen that one once. But yeah. But
why Ben Franklin though? No, Chaz.
yeah,
we're
go
going to talk more because you know me and Benny Boy are friends. So why Ben Franklin for you, Mike?
Well, he's the first American self-made figure in American history that really took himself from nothing to fantastic success. So I really admire somebody that could do that.
Yeah, and I mean, when you're throwing around quotes like "a penny saved is a penny earned," I mean, he was. I mean, just for you listeners out there, if you're not convinced that Ben Franklin was like a just awesome historical figure, go to one of those quote sites on the internet and just type in Ben Franklin quotes. He has so many good ones out there. It is ridiculous, but
and Clay has that quote tattooed across his chest. That's how powerful it is. For
no,
him.
it's a tramp stamp I have.
Oh, okay. That quote. Jeez, poor Benny. Don't do that. Don't do that to poor buddy Benny.
No, and I did not need that visual. Oh, no.
Yep.
My bad. Oh, great. Now I'm freaking out and gross out. Mike's listened to all the podcasts, and for sure, I'm starting to push the boundaries. You can tell we're well past episode 100 now. I don't even care anymore. We're going to keep pushing the boundaries.
Definitely. But what do you do for fun and hobbies whenever you do find time? I mean, you already make the most of your time as it is, so what do you do for fun?
Well, my wife is a huge fan of theater, and since we live very close to Manhattan, we're always in the city seeing shows, and actually last weekend we went to the opera, so she's a big fan of that. So I join her in that, and I love to read. I still love history, anything about history, and I do a lot of reading.
That's
Quick question for you: Do you use any like audiobook services like Audible or anything like that for your long car rides?
Yeah.
Okay. All right. Just making sure, because I was gonna say that's how I love getting through books when I'm in the car. I always just like you. It's kind of like you want to make the most of that time, and I always get through a good amount of books. Just kind of listening to stuff when I drive. But yeah, I just wanted to see if you're doing that. I know you're using it right now for course material, but yeah, it's a great way. I always tell people if they have long commutes and stuff, don't just spend the time listening to the radio, the same songs over and over again with commercials and stuff. Just get some audiobooks. You can really expand your mind and your knowledge with it.
Well, exactly, and where I live. The library service has a great system where you can download books for free. So I'm all about that.
Oh, nice. Yeah, free is that's always
true. Benjamin Franklin book listing. I mean, you're just right there. Perfect.
And I'm trying to think, is there any opportunity cost there? But not really, because if he's in a car anyways, he's not really giving anything else up. So he might as well just, in your words, Ches, expand his mind some more. So, yeah, this was man. Time. We'll have you back for sure, Mike, because I am count me fascinated. You're this is some good stuff. But 3 words, and these 3, I know you know the question, but for our listeners out there, give us and our listeners 3 words that you would associate with successful trading.
I would say, well, I got 2 words: impulse control. Those are my 2 words.
So you can summarize. I mean, that's how good Mike is he can summarize, or he can give the 3-word answer in 2 words. And I don't know, Ches, are you buying that? I'll buy that. Impulse control.
I'm buying that. That just gives more weight to each of the 2 words because you've split the weight of one of them across the 2. So, yep, obviously extremely important, especially in trading and pretty much in life in general.
Yeah, but in trading, the fear of missing out it's real. And it's hard to know that unless you put your money on the line, but yeah, impulsive is that's not where you want to go in the world of trading. So yeah, that's well said, Mike. And yeah, I guess we're gonna have to unfortunately cut it before you start to get mauled. But would you come back, Mike? Here I am assuming that we'll have to have you back, but that would assume that you'd want to come back. Would you ever come back to join us?
Anytime.
Excellent. Well, thank you again, Mike. I'm going to speak for Ches and myself because great interview, had a great time, and appreciate you just sharing your past, where you're going to be headed, and yeah, a good discussion there that I know for sure listeners will enjoy. So for you listeners out there, a few final things before we go. If you are listening on YouTube, then be sure to check out the remainder of the channel. Lots of other good videos, live trading, quick tip videos, some random fun videos. Hopefully you ultimately decide to subscribe to the channel itself. If you're listening on iTunes or any of the other podcast players, subscribe. And especially on iTunes, if you could leave us a rating, that will really helps us out. And as I've said in the past, even if you never spend a dime on the site, don't ever join the chat room. But if you enjoy this, you can help us out by just leaving us a simple iTunes review. And then finally, if you're listening on the site, leave us a comment down below the post, and we will read those, and we will definitely reply to you. So thank you again to Mike. Thank you again to our esteemed co-host, Ches. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.